Hello traders. The title of the video is Elliott Wave Analysis Home Depot. The financial instrument that we are analyzing today is Home Depot, belonging to the Dow 30 Index, Epic HD Hotel Delta. This is an American stock, a very popular stock. I've been asked by a TSTW trader to analyze the Home Depot stock from the viewpoint of Elliott Wave analysis. If you agree with me, this is the first Elliott Wave right here, and we have a zigzag second Elliott Wave. Some trader may say WSY wave, some trader may say all right, okay. Something else. One thing is certain is that the first wave is this one here, and the second wave has ended in 2009. So first wave somewhere in the 1990, where you born that time, ended right here. All right. In 2000, technology bubble has caused Home Depot to come down from 2000 to 2003, and then we have some X price bouncing up here from in the B part of the zigzag, and then end in 2009. So from 2000 to 2009, Home Depot was in corrective phase. Now this is it. This is the best time to buy and hold Home Depot. All right. So now we have the third Elliott Wave starting here, and realities, third Elliott Wave. Now, you will see similarity between the Home Depot and the Dow Jones Index because it belongs to the Dow Jones, isn't it? So as I told you before, for the Dow Jones Index, same thing for the Nasdaq 100, same thing for the S&P 500. We put a question mark on this fourth Elliott Wave. Do you remember? All right, fourth Elliott Wave with a question mark. All right, is this the fourth wave? That's the question. All right. Now, are we now in the fifth wave? You can see that I did not put 5 here because of the question mark on these 4. We need to wait and see. This is it. All right, so I leave it here. Is this the fourth Elliott Wave? And now, are we in the fifth wave? All right, that is the question. So I do not put the fifth wave here. We will see. All right. So to avoid a long story, according to the Elliott Wave principle, if the second wave has taken so long, talking about the time, the duration of the second wave, if it has been too long, you see, from 2000 to 9 years for a second wave to be completed. So that's a long time in the life of a human being. All right. So Elliott Wave trader will forecast that the fourth wave will be swift, meaning that it will take a shorter period of time for the fourth wave to be formed. So probably that was the reason why we have this kind of messy, all right, fourth Elliott Wave, because of the alternance between the second Elliott Wave and the fourth Elliott Wave, when we are focusing on the duration of the second wave in comparison to the fourth Elliott Wave. Is this the fourth Elliott Wave? Are we now in the fifth Elliott Wave? All right. Another thing that I will say to traders, if for Elliott Wave traders, if we go to the yearly chart, all right. So that's why I use the monthly chart for my wave count, and then I'll check the yearly chart. So on the yearly chart, you can see here, a lot of traders go on the yearly chart. They will say first Elliott Wave, second Elliott Wave for a Home Depot stock or American stock, very popular stock, all right. And then they will say, we are still in the third Elliott Wave. All right, no big difference, all right? No big difference. Personally, according to the Elliott Wave guideline that I recommend to traders, when we go to the yearly chart, we see this kind of yearly candlestick bar at the top of the third Elliott Wave with a shadow like this. I usually call this top here the end of the third wave, and this one I'll call it the fourth wave. But it worked for me more. That's why I recommend it. But you can compare your wave count to mine, okay? But we will see. So we are going one step at a time. Okay. If the price does not validate our wake-up, we will review our wake-up and align. We don't want to, okay, disobey the price action. Yes or no? The price is the king. All right. So this is why I'm calling this the third area. But other traders that are not following our guidelines, we say first wave, second wave, we are still in the third wave. Okay, maybe they are right. We will see. Okay, I don't argue about that. All I'm saying, I'm sticking to my own wave count. That's all. All right, that's it for the idiot wave. So now, one more thing very important I want to mention to traders. So this is what we are saying to idiot wave traders. So you are idiot wave trader, all right, and you've done your idiot wave count. Other traders are not idiot wave traders, so they are doing things differently, and sometimes they even beat the idiot wave traders. That's why I say to idiot wave traders that you must be a multi-talented trader. So here it comes. Okay, the price does not go up or down for no reason. Do you know that? It always headed to a specific target level. Okay, so here we are, very fast. So you see this second wave that you are calling second wave ended here. Normal chart pattern will say, George, it went up, all right, and it formed this round bottom here. And they say this is the neckline, the pink line here. That's the neckline there, George. I don't care about your idiot wave. That's the neckline there. So they will use the depth of this round bottom, okay? They say it's a V pattern or whatever they call it, and they project it like this. They say target, first target, right there. That's the red line there. It's a bit funny. Did I squeeze my line a bit? Okay, that's it. That's the target, first target, $122. They hit it there. Did they take profit there? Yes, they take a profit there because there was ultimate target there. Price break a ball, retest that target level. Those are not idiot way traders. Market principle. It goes above it, they say, okay, next ultimate target. Are you with me? So combine the idiot way trading. They say, next ultimate target, $171.37. You ask them, how do you know? They say, well, I'm not idiot way trader, but I use market principle. Okay, so second target, 171.37 for the Home Depot. Can you see? You see that candlestick bar slowing down. They took profit a bit early here. I don't want to dwell on that because of the pitchfork tool. I will mention that in a minute. And that candlestick bar there. Embrace above that second ultimate target. It retested there. Look, those are the places when idiot way trader can make excellent decisions if you are combining the idiot way trading with okay, market principle. Idiot way principle, market principle, two different things. So next ultimate target, if you're using the same measuring stick like myself, you will see that the next ultimate target is $220.26. And professional knew that if they hit the target 3 times, in their mind, the first thing flashing is what? Overbought. But in theory, all right? So 220, you see, that's why we have, you see, you look at this one. So here, so price stop here, people say third idiot wave. People say, no, the target is here, 220.26. Now I understand this price move here. Now you understand also the shadow here. Just market principle combining the idiot wave principle and the price target. So it becoming clear to us. So what have I said? When we are using the idiot way, we are gathering information to make excellent decisions, to analyze, to dissect the price, okay, to look inside the price. Okay, but we don't want to let ourselves down as an idiot wave trader. We want to use other tools. So that's why I have a different channel. 2 for idiot waves, all right, day pro traders, all right, George trio. So I'm speaking different languages using my different accents. I use Texas for my Texas. My Texas, is it my Texas accent? Yeah, Texas accent for idiot wave. Okay, I use my Mumbai accent on day pro trader or something like that, and I use my Australian accent at George. Okay, this to make you laugh a bit. Okay. All right. Okay. So now we have, this is it. This is a target zone, okay? 220. So let's make it a bit thick here. But now we're going to go back again to the idiot wave, all right? So stay with us if you are idiot wave trader. I put pressure on you a little bit as an idiot wave trader, but don't worry. So So for idiot way trading, so we see here, we say this is the fourth way. So what I want traders to do, all traders, idiot way traders and Fibonacci traders. So usually for the idiot way trader, we know that when we see the third idiot way like this, another way to determine the possible target level for the fifth idiot way is to apply the Fibonacci extension to the last segment of the third idiot wave. So this is the last segment of the third idiot wave. So third idiot wave started from here. I'm speaking with my Texas accent. I'm not saying idiot wave. I'm saying idiot wave. Okay. All right. So started from here. So that's the last segment of the third idiot wave. All right. Okay. So when you apply Fibonacci, so to help traders a bit, okay. Here it is. So if you put that low of that extension, Fibonacci extension, at the low of July 2017, all right, you connect it to the high of January 2018. Okay, so then you see this black line here, okay, at $233.68, corresponding to the 138.0%, or some traders say 138.2%. I use 138.0% Fibonacci extension of the last segment of the third idiot wave. That's the level where we are now. And if you look on this chart, you can see that tomorrow, which is Sunday, now if you are watching this in some part of the world, probably by the time you are watching this video, it's already Monday there. But in London, tomorrow will be Sunday for us, and will be all right. Sunday will be the 29th of September. So on Monday, that candlestick bar will be closed on the monthly chart. So it's not yet closed yet. So after Monday, so it makes sense if you are trading on Monday, be very careful, be agile. That's what I would say to trade. Be agile because a monthly candlestick bar will be closed. All right, it's better for day trading on that particular day. All right, and play safely. That's what I would say. Okay, because we want this candlestick bar to close. Most professional traders want this candlestick bar to close. Now, if it closes below that $223.68, which is the 138.2% Fibonacci retracement of the last segment of the third idiot wave, what should I say to traders? Priority for bullish signal above $233.68 and priority to bearish signal below that. And traders say, you always saying that. You are not helpful. Because I don't want traders to take a side. I want traders to be ready to buy and to be ready to sell. You see, that's it. Because of the experience I had in the past, okay, when I purchased a trading service and the person said to me to buy, I just buy. All right, price went down. So be ready to buy and be ready to sell. And we use this warning line. That's it. But we are not just going to buy. Okay, we're going to look for a trading setup at the best place, at the key level, on the edge, and then if it's set nicely, we implement what we call a different time frame trading method. That's the only way you're going to get paid. All right, that's the only way. And sometimes traders are taken out of the trade fast. All right, they done everything right, but they got taken out of the trade fast, and then sometimes you have to try maybe once or twice. Okay, that's why we use 5% money management rule, and controlling the risk is our priority. That's what you need to do. But so this is it. Priority to bullish signal above $233.68. Priority to bearish signal below. One more thing. If it goes above that level and finds support, what's the next level we should watch? Are you a day pro trader subscriber? 161.8% Fibonacci extension level of that last segment. So if it's going up from here, we watch. Trader will take it from there to the 161.8%. The 161.8% is a breakout zone. So is it going to break above it, retest it? So look for clean cut trading setup. Another thing I want to say to swing traders, if you are swing trading this stock right now, you need to be very agile because the best part of swing trading is normally during the third area wave. So when you are swing trading, be very agile, which means be very defensive, very protective, all right? Have a plan and stick to it. And bank profit, securing gain. That's what I'm saying. So if you don't want to come out and the price move up, okay, reduce your losses, manage the trade, okay, like a prudent swing trader because we are at a junction where it's a little bit tricky now. So we're going to take it one step at a time, gently, gently, and gently. It may continue to go up more, all right? But we want to go. All I'm saying is that, okay, don't expose yourself, but be defensive. That's all. I don't want to control traders, okay? One more thing is that, what are we now? So 50 minutes almost gone on. You can see the channel. So we are also hitting the top of that channel. Can you see? So if you draw a channel roughly, so, okay, roughly, the low of August 2014, okay, you connect it to this low here, this low of August 2017, all right, you draw that first line here, okay, and then just select one point here, probably the high of February 2018, and draw a line that is parallel to this one. That's your channel right there. So we are now on top of that channel. In fact, we are at the hotspot trading zone. The intersection of this line, this trend line, and that 138.2% Fibonacci extension level. All right, that's it. Okay. Last point, very important point. We apply the Fibonacci. We apply the Pitchfork tool. So roughly somewhere here. Call it low of November 1990. If you have data for that, okay, November 1990, connect it to the high of roughly, all right, a minute, okay, to the high of December 2000, December 1999, and then you connect it to this low here. I'm seeing here to this low of January 2003, and that will allow you to draw that Pitchfork tool. I'm going to highlight my Pitchfork tool. You see, is it thick enough for you? That's it. You have that Pitchfork tool on your chart. Okay, that's it. So have that Pitchfork tool on your chart. So the next thing you want to do, because a trader that asked me this question also is using market geometry, which is very good. So we measure the width of that Pitchfork tool also, apart from the target that we have set. All right, now we projected that the width of the Pitchfork tool in the direction of the price, bringing us somewhere here, almost corresponding to that line there. I don't want to move my line to the top of it. You can do that. I'm gonna leave it mine like this. Okay, I'll leave it mine like this for now. So, but if you move, you see that you draw a line to the top of that projected width. So that a line that is parallel, okay, to the Pitchfork tool. All right. So we are mapping out the chart after the EVO wave analysis to determine the best place to buy or to sell, looking for trading setup. And then we will implement a different time frame trading method to trade like a pro. Now, one more point, very important. Connect. This is very important point. Connect this high here, the high of December 1999, to this high here, to the high of January 2018. That will allow you to draw this. Some trader may say, George, that's too many lines. It's too many lines. All right. Don't worry, you get used to it, okay? Slowly. That's what I say to traders. Traders always say, George, I don't understand your beautiful Texas accents. Okay, I say, you'll get used to it. And traders get used to it. Most traders get used to it, okay? And everything you do in life, you can get used to it if you are interested in it. So you may say, Joe, there are too many lines. So draw what you can draw, okay? And slowly but gradually, you'll be surprised. You get used to it. I'll tell you a quick story. Years ago, I couldn't handle, okay, the candlestick chart. I was asking to have, okay, line chart instead. But over the year, I get used to the candlestick chart, and I get rid of the line chart. I don't want to use the line chart anymore. We can use it in conjunction with the MACD, all right, the line chart, okay. But here we are. I get used to the candlestick chart. So this is what we are talking about. One can get used to something, all right. So, so if you are saying draw too many lines, don't worry, okay. Draw what you can draw, and slowly but gradually, okay, you will also get used to, okay, so color that trend line now in black. So what we are seeing now, you see, that's what we are talking about. So this point here, you see, that's again, that's what we are, this is a hot spot trading zone there. So you can see during this month, the price went to that hot spot trading zone, you see, between this black, that blue line and the 138.2% level. And now we have another hot spot trading zone between this green line here, the target level that we used before. Remember the target that we used before for that V button, all right? And okay, that intersection between the last trend that we do and the price target here. So we bounce between those, okay, two hot spot trading zone, one hot spot trading zone, another one here, all right? So the price may consolidate in those two levels, level of $233.68 and 220. It may go boom, 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 okay, before crashing down or before rushing up. All right. If you go quickly to the daily chart, I'm pushing a bit too far now. I'm over my time, 20 minutes now. So on the daily chart, what do we have, my friend? So again, we come on any time frame. What we need to do is to draw, okay, lines. So I'm going to draw one very fast, that is, okay. So you may say too many lines. See, this is what we are saying. Anytime you change time frame, you will draw your trend line, okay? Your channels, all right? And you will map out the chart, okay? That's what I'm saying. So on the daily chart, so connect to this low and this one here. Then we choose one point here. We draw another line that is parallel. You can see again that is holding nicely. We are at the top of that, okay? So this is how an idiot wave trader can get paid. After counting away, we leave the idiot wave aside. After forecasting the market using the idiot wave principle, we leave it aside. We use other market principle. We draw line, channel, and then most importantly, we want to use different time frame trading method. You see that I went to the yearly chart, I went to the monthly chart, now we're on the daily chart. Every time we change time frame, we are analyzing the chart, we draw channel. This red, the channel that we have on the daily chart, there's a median line there. So price hit the top, come down near the median line. Now it's near this top. Is it going to come back down or consolidate between those two black lines? That is the question. So this is it. Very simple. Okay. So if you go on the hourly time frame, so you can see on the hourly time frame, you see a channel like this. Okay, on the hourly time frame. I'm going to go in a minute to the hourly time frame. And you will see that this is what you want to do. You do not want to, okay, violate the market pattern. This is it. Every strategy that you apply, whether TSTW SY008, TSTW 24, or your own trading system or strategy, you do not want to violate. So from the daily chart, now let's go to the hourly time frame. Here we are. So you can see on the hourly time frame, it came out of that channel that I've drawn. Press above it and retest it. Now it's going up a bit. So now on the hourly time frame, it's not easy to do that. So all I will do now on the hourly time frame is just draw this, place a pitchfork tool like this. See this low here? That will be helpful for us to monitor this Home Depot stock. The pitchfork tool, so it came out of it. So it came out of the bit here on the edge. All right. Okay. It makes sense. So this is about, okay, Elliott wave analysis, Home Depot. All in all, my friend, all right, all in all, let's go down a bit to the 10-minute time frame. So on the 10-minute time frame again, okay, here we are drawing channel all over the place because we are not ashamed. Is our chart. Okay, bam, 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 bam. Okay. So to summarize this video, the Home Depot, we have a question mark on it. Is it in the fifth wave? Is this the end of the fourth Elliott wave? At this junction, it's prudent for all traders to take it one step at a time. This is not the best time to buy a hold. Even the prime may continue to go out, talking about short term to medium term. All right, you may say, Joe, you told me that I shouldn't buy up. But all I'm saying is that we need to be cautious at this junction, all right? Anything is possible. It may drag on for a while. It may continue to go out, but you want to take it gently, gently, gently. If you work beautifully, it's good. If you are swing trading, be very, very agile. Personally, at this junction, I'll go into day trading mode. But if you are swing trading, you want to be secure in your gain, all right, if it work for you, and then being very agile, looking only for the best trading setup on the edge, and then you want to implement a different time frame trading method. As an Elliott wave trader, you have done your Elliott wave forecast, Elliott wave count, first wave, second wave, third wave, fourth wave, and we're now in the fifth Elliott wave. Map out the chart as I've done it here, all right, and then just now combine the Elliott wave forecast with the top-down trading method. This is what we are talking about. There's a difference between Elliott wave forecast and market timing. The market timing, we use a different time frame trading method. The market forecast, we use the Elliott wave forecast. So one thing that Elliott wave traders are lacking that is that they are not combining the Elliott wave forecast with the market timing. So the market timing consists of, okay, finding a trading setup on the edge and then implementing a different time frame trading method. I think I said enough. We are recording this video today because a TST trader did ask me to review Home Depot. They had to give me a good excuse to talk to you for more than 20 minutes. All right, so it's good to talk. If you have any question or suggestion, please leave it in the comment section. And of course, I will be recording another tutorial to answer your specific question. I can continue more and more and say more about this Home Depot, but we'll stop here for now. Okay. Just look for trading setup on the edge, break above retest, break below retest, and implement a different time frame trading method. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you say, George, for 28 minutes, it's all nonsense, and you were speaking with your Bombay accent instead of your Mumbai accent or your Texas accent, I dislike the video so much. All right, please mark it down. However, if you say, George, are you kidding me? This is the first time you have done a good video after 10 years or more on YouTube, all right? I like it very much. So feel free to share it on the social media, okay? Any comment, any thought, leave it in the comment section without breaking, okay, the YouTube community rules, please, all right? Until the next time, enjoy yourself and be very happy. We are the TSTW SYS008 traders talking about Elliott wave analysis, Home Depot. The financial instrument that we are analyzing today is a Home Depot Incorporated Epic HD. Not HD for video quality, but HD Epic Hotel Delta. Thank you for watching.